Polkadot, one of the top 10 cryptocurrencies, with one of the most simple tickers, DOT. We're gonna break it down today. State of Polkadot. This is a cryptocurrency you may not know about, you may not care about. To be honest, I find it really easy to just kind of glance over it. The branding, the name, it doesn't really speak to me, but some of the things that they've got going on do. And I bet it's gonna speak to you as well. So we're just out here like Wheezy, trying to find our spot like a Polkadot. My name is Vosk. You're on the Voskcoin YouTube channel. None of this is financial advice, and I'm not some big, I've got a bunch of Polkadot holdings. I just love researching cryptocurrency, and in these bearish conditions is when I do the heavy research and I figure out what are these cryptocurrencies that'll be around in the long term that will be the easier 5, 10, 20x's and so forth. We're looking for blue chips, right? We're looking for platforms and blockchains. We're looking for something with a bit of a future. That could be Polkadot. So we're going to be breaking down State of Polkadot. A lot of this will be pulled out of Messari's research report that they posted here. So I'll link it out below. Read along with me or refer back to it at your leisure. Again, huge shout out to them for doing a lot of the heavy lifting, but we're going to bring our insights and opinions here as well along the way. Speaking of insights, let's look at the key insights right now. So, Parachain slot auctions continued with 8 new winners. 28 auctions, 132 million. DOT, 11% of the total supply, worth 850 million, has been bonded. We'll talk about just exactly what that even means. The cross consensus message format, XCM, adoption continued to increase. Parity Technologies announced the next version, XCM v3. Further details surrounding Polkadot's governance v2 were released. It will increase the number of proposals eligible to be voted on at once and further decentralize the network. Fundamental metrics like validator count, nominator count, and percentage of total supply staked remained consistent. So, this is a technical report. Polkadot is a technical chain, and I'm going to try to break these things down the best I can for you as we move through it. And simplify it, if you will. So this is gonna be a bit heavy as well because it's a whole lot of I want to collage worded. But here's a elaborate primer on Polkadot. It's a nominated proof of stake blockchain. Means it staking, right? It's not a mineable chain like Bitcoin. This blockchain is designed to support various interconnected application-specific layer 1 chains known as parachains. So this is a staking proof of stake blockchain that, nominated proof of stake is their version of a blockchain consensus mechanism. Basically this, technical thing that moves the chain forward, right? Again, not proof of work, not mining like Bitcoin. It's a multi-chain layer 1 blockchain. It's a platform. These application specific layer 1 chains are parachains. Each chain built within Polkadot uses Parity Technologies' blockchain development framework, Substrate, which allows developers to select specific components that best suit their application-specific chain. Polkadot refers to the entire ecosystem of parachains that plug into a single base platform known as the relay chain. This base platform does not support application functionality, but instead houses all validators and is responsible for securing, governing, and connecting, bridging, if you will, all of the parachains. This is a nice little visual here, right? We've got the parachain. We see how it all kind of connects together here. They take their name from the concept of parallelized chains that run parallel to the relay chain. And this is really their solution to scaling. I mean, why wouldn't you just have one chain and put everything on it? Well, you end up with Ethereum, huge congestion, and just insane fees and slower transactions. So this was their solution to exactly that. Substrate is their programming language here. It enables developers to quickly and easily build future-proof blockchains that they claim can be optimized for any use case. It's boasted as being the most powerful framework to quickly build these customized blockchains. Again, the relay chain is that central chain on Polkadot. All validators of Polkadot are staked on the relay chain, and they utilize the DOT token, and they validate for the relay chain. There's not a lot of transaction types that take place here. Governance mechanisms, parachain auctions and participating in NPOS, which remember is that nominated proof of stake. The relay chain is deliberately minimal in functionality. Smart contracts aren't even supported on it. Its main responsibility of this is to coordinate the system as a whole, including the parachains that do support the smart contracts. So that's the extended primer on this, if you will. At the time of recording this video, Polkadot is the 11th biggest cryptocurrency in the world with a market cap of $7 billion. The crypto market continued to be at the mercy of an erratic macro environment in the last quarter. Polkadot's market cap followed with a higher beta rallying 39% before fully retracing, ending the quarter down 6%. Intramural metrics like DOT circulating supply and DOT treasury balance continued to increase steadily as expected. The DOT token is inflationary with a targeted 10% annual inflation rate, which, just to be clear, it's much less than the US dollar regardless of what they tell you and the way they move the numbers to best suit themselves. Those dirty fiat currencies. The treasury is funded primarily through block rewards and transaction fees. Meanwhile, extraneous, I got that one right today. Extraneous. It's close enough. Metrics like revenue and treasury expenses saw fairly large fluctuations. Their financial performance was pretty stagnant. So Polkadot's revenue is low compared to peers because parachains do not pay transaction fees to the relay chain. Revenue spikes around new slot auctions because of the candle style mechanism here. Again, that relay chain is the core connective layer for Polkadot. Parachains bring the functionality and attract and cater to end users. As such, the majority of network activity occurs on parachains. Parachains transactions are not subject to relay chain transaction fees. Instead, parachains have full autonomy over their fee structure. Most parachains have opted for transaction fees denominated in their native tokens, which I would too. It helps just drive that use case for whatever you're building out there. They've also chosen to pay a percentage of generated fees to collators to avoid network spam. These collators maintain parachains by collecting parachain transactions from users and producing state transition proofs for relay chain validators. In other words, they maintain parachains by aggregating parachain transactions into a parachain block candidates and producing state transition proofs for validators based on these blocks. Pay attention. I feel like, again, it's a lot of technical wording in Polkadot. I mean, it's a very technical chain and just development here. This is really a heavy, just technical analysis, not literally TA, of this chain. So, again, it's interesting because when we really start to dig through this, we can look at the fundamentals. We can look at this chain's healthy, if it's worth being in long term, if it's worth building on, everything like that. So the relay chain doesn't support some end user functionality, token transfer, staking, validator, elections, governance voting, parachain slot auction with fees paid to them in the form of DOT, generates Polkadot's revenue, okay, which is important. Revenue tends to spike at the start of most auctions because, again, of the candle mechanism. What is the candle mechanism, you ask? Candle auctions are a variant of open auctions where bidders submit bids that are increasingly higher. The highest bidder at the end of the conclusion of the auction is considered the winner. To be honest, this is technical, especially the kind of game theory and logic behind it. So we'll push forward, and I'll link it out down below if you really want to dig into the candle mechanism. In the last quarter, Polkadot's revenue was $115,000 with the circulating PS. What is a PS ratio? Let me take a clip from the State of Avalanche video we just did, where we talked about what PS ratio is. From a valuation perspective, the relationship between network value and revenue, price to sales, P/S ratio, continued to reverse course, moving from 379x to 665x. So let's compare those PS ratios. Avalanche's revenue was $2.3 million with a circulating PS ratio of 665x. Cosmos's hub was $142,000 with a circulating PS ratio of 4,965x. By traditional standards, each of these base layers have abysmal metrics. The poor revenue-centric metrics paired with high valuations highlight the difficulties in valuing base layer protocols. Let's look at that treasury balance and expenditures increase. So Looking at the graphic here, there's a key note in it. Treasury expenditures are minimal, with only 2.4% of the treasury spent over the last year. The underwhelming use of the treasury is because of the restrictive governance model. The recently announced Governance V2 should increase treasury expenditures, which would lead to more marketing, more building, more funding, more everything, because it's more spending, or at least that's what it's supposed to do. This treasury is funded by block rewards, validator slashing, which is penalizing of these validator nodes, which are basically running their proof of stake networks, running these computers, similar to an Ethereum validator, right? And they're penalized for not doing it right. Transaction fees, staking inefficiencies. In the future, Pair Threads will also generate treasury funds by participating in per block auctions for block inclusion. To be honest, I find Polkadot very convoluted. Right? I mean, this is hard to follow. Parathreads, parachains, candle auctions, per block auctions for block inclusion. To be honest, for new users, they have to be saying, what the fuck is going on? Because even as I dig around in Polkadot, and I'm not some super genius, but I do crypto 24/7, 365 for more than half a decade now, I'm still like, man, a lot going on here. At the end of last quarter, Polkadot had a treasury with a massive war chest of 37 million DOT, equaling $236 million. Keep in mind, $237 million, and it's down 89% from its all-time high just 11 months ago. In the right market conditions, they're sitting on insane money. Despite the substantial treasury, though, the expenditures only amounted to 2.4% of the treasury over the last year. Again, this new Governance V2 model is supposed to improve on these deficiencies and really help get the funds flowing. Looking at the active accounts in the past quarter, compared to the quarter before that, compared to the quarter before that, compared to the quarter before that, it's going terrible, right? It's going pretty terrible. Active accounts in the gutters compared to quarter 4 2021, but market conditions were very different. Still, lowest performing quarter compared to the last 3. But maybe they're up in transfers. No, they're down in that too. Hopefully they have more new accounts. No, they're also down in that. Really no good news here, but it is to be expected. Pretty much new accounts, active accounts, transfers on chain are down across the board on all blockchains. So this isn't a problem unique to Polkadot. It really reflects just how bearish things are right now. As mentioned in the revenue selection, the Relay chain supports account creation token transfers. During last quarter, both metrics experienced rather substantial declines for the third consecutive quarter. Declines likely driven by less parachain slot auction participation and fewer crypto users because of the bear market. The Relay chain supports functions like account creations, sole purpose is to relay information between the parachains and coordinate the validator set. To remove these ancillary functions, Polkadot is rolling out new common good parachains. The majority of activity in the Polkadot ecosystem happens again on the parachains. Each parachain is a layer 1 blockchain with its own community, economy, and governance model. Unfortunately, it's difficult to aggregate parachain user activity because of the network's infancy. Members of the Polkadot community are currently building improved data sources to monitor holistic activity. In the interim, XDM messages can serve as a proxy for ecosystem-wide activity. And it's down. It's down compared to all the previous months. But that's okay. And really, it's what to be expected. These XDM messages are sent parachain to parachain and HRMP channels. You wanted another acronym, didn't you? Well, now you got one. The expansion of XDM is critical to continued advancement of the Polkadot ecosystem. It brings these multi-chain capabilities to life and opens the door for novel application development. As a common language, it allows parachains to exchange messages with other chains. It's similar to IBC, inter-blockchain communication on Cosmos. Gavin Wood, a bit of a controversial creator for Polkadot, recently announced XDM v3, the next generation of this cross-consensus message format, XDM. Total validators, 297 this quarter, last quarter, the one before that. Total nominators, up a whopping 0.4% compared to the last quarter. Nominator stake, up 2.5%. Percent of total supply staked, up 3.1%, which is a solid increase compared to the previous quarter and the increase there. Minimum active validator requirement in DOT, up about 1% there. Basically, it was another consistent quarter for their decentralization and staking. Fundamental metrics like validator count, percentage of total supply staked, minimum DOT required to run an active validator were stable. The consistency in metrics related to decentralization and staking point to a functioning and healthy ecosystem. Validator stake is evenly distributed here. Count of validators compared with DOT staked per validator. The validator payout schemes result in probabilistic guarantee that all validators earn nearly identical rewards. The equally dispersed DOT staking yield creates an environment where nominators are incentivized to stake with lower staked validators to maximize yield. During the last quarter, the payout scheme worked. 292 of 297, 98% of these validators, had 1.8 to 3.4 million DOT staked. The relatively even validator stake distribution strengthens Polkadot's decentralization. Although difficult to calculate, Polkadot likely has a very competitive Nakamoto coefficient relative to peers because of the evenly distributed validator stake. That Nakamoto coefficient is a great question. What is that? Let's take an excerpt from a recent State of a Cryptocurrency video we did. Avalanche Nakamoto coefficient. This represents the minimum number of validators needed to compromise Avalanche security. Good news is, the coefficient continues to hover around 30, slowly improving over the long term. This is a good thing. It's remained stable, it's remained in a healthy zone, and I hope that they achieve further security and decentralization the best they can with a proof of stake blockchain consensus mechanism. Personally, I think the amount of Polkadot tokens you need to become a validator is just simply way too much. It's way too much, right? Ethereum went up heavily in price. Even now, as it's down significantly from its all-time high. But launching a validator node yourself on Ethereum is still so much more attainable than creating a Polkadot validator. I don't like that. It's lame. Leads to centralization, and I think that count should simply be pushed down to reduce that barrier to entry and decrease centralization, really, in regards to that chain. There are some crazy metrics on Polkadot. Looking at Polkastats here and pulling the total staked amount, 51% of DOT tokens are staked. That's crazy. Also, just to make this very clear, this isn't a sponsored video. I think it's fun to break down this research in video format for you guys. Also, Voskcoin has no relationship with Messari. So this isn't like a covert Messari ad or anything like that. Just want to make that very clear. Just doing my thing, researching crypto, having some fun, making some videos, sharing the content with you, and I hope that it translates into some sort of value for you. But let's jump back into it. Eventually, Polkadot plans to expand the validator set to 1,000 to support 100 paired chains. Polkadot must first improve network storage and scalability to support additional validators. Staking rate is consistent here, which apparently the ideal staking rate is 50% on the Polkadot network. This is subject to change with the number of pair chains to secure the network while maintaining ample liquidity. Year to date, the percentage of total DOT staked has been greater than the ideal staking rate. It's changed from 54% to 59%, and again, we just reviewed it live, 51%, which is closer to this, target ideal staking rate that they have. When the system staking rate is above the ideal staking rate, nominator rewards are reduced and the extra rewards are routed to the treasury. Well, good time to be in the treasury, I guess. In the last quarter, Polkadot released 2 new staking-related products, nomination pools, and staking dashboard. This nomination pool allows users to create permissionless staking pools and enable anyone with at least 1 DOT to participate in staking. I think that's great. This doesn't fix the centralization issue of not that many validator nodes, but I will say they have many more nodes than a lot of comparable blockchains. For example, the BNB Smart Chain, just to rattle off one quickly. Also, the ability to stake with just 1 token is fantastic. I participated in relatively early Polkadot staking when it was added to Kraken. And that's a centralized exchange. Put my tokens in there and, just hold my blue chip in the last bear market. earning some yield on it. Again, not pushing Kraken, you do whatever you want to do. But my point is, I love cryptocurrencies that give you the ability to earn interest on your coins. And the fact that they have permissionless staking pools now and such a minimum barrier to entry to participate in that, it opens the door for decentralized participation in staking, as opposed to using something like a centralized exchange. To be honest, I think they're both great options. Happy to have both options. Of course, being crypto native, we all yearn and desire and quest for decentralized everything. But at the end of the day, if you don't have that many tokens, it's not really worth it to get too entrenched, right? Like, I didn't have that many. And then the number went up and I sold it right there on the centralized exchange. Easy peasy, cashed it out, paid my electric bill because you know that thing hurts. Anyway, moving forward. These new products induced a 3.1% increase in staked DOT quarter over quarter, the largest increase this year, which is simply proving that that's great. It's working and it's having an impact. Now this one's pretty cool. Let's look at the ecosystem developer activity, right? Polkadot parachain auctions. We look at the DOT bonded, percent of total supply bonded, and the amount raised. I mean, these are some serious raises, right? I mean, that's not 200,000. That's $200 million, all right? That's closer to $250 million. That's crazy. The lowest number down here, 63 grand for the Darwinia self-funded parachain auction, bonding about 10,000 DOT tokens. I'm not going to dig into these different parachains today. There's a lot to unpack, and that would be best suited for another video. We can see very easily, though, that the amount raised right here is $1 billion, if you round up. After commencing in early November 2021, the slot auctions have continued with a new auction every 12 days. The 8 new parachain winners this quarter are Darwinia, Bridgeport Group, Integrity, Kilt, Kylan, Aventus Network, Water, Oak Network. And, quick run through just what these are. Darwinia, a trustless multi-chain bridge hub. Bridgeport Group, infrastructure for Web3, metaverse, and NFT ecosystem. Integrity, a scalable public blockchain for processing sensitive data. Kilt, a blockchain identity protocol for issuing self-sovereign, anonymous, verifiable credentials. Kylan, a modular and configurable decentralized data infrastructure. Aventus Network, enterprise-grade blockchain allowing businesses to easily develop and implement efficient blockchain solutions. Water, an ecosystem built to service end-to-end of a new class of ethical commodities, carbon credits, metals, agriculture, etc. Oak Network, a hub for cross-chain automation, enabling multi-chain applications to schedule, automate, or EVM smart contract functions here. So let's look at the Polkadot DOT bonded via these parachain auction decreases. DOT bonded through the parachain slot auctions is locked on the relay chain and thus removed from the circulation for the approximate 2-year slot lease. Through 28 auctions, again, 132 million DOT, 11% of the total supply worth 850 million has been bonded. Concurrently, DOT has a targeted 10% annual inflation rate with no max supply. So yes, this is an inflationary token. The amount of DOT bonded through these auctions steadily declined. Lower thresholds required to win a slot have led to projects self-funding their slot acquisitions. When projects self-fund their slot, they do not crowdfund DOT from the community in exchange for their native tokens. As a result, they retain a larger percentage of their native tokens, which they can then sell via another channel, airdrop to the community, add to the treasury. More parachain teams will likely self-fund their parachain slot acquisitions over the remaining 13 slots, or 13 auctions scheduled through February 2023. Kusama is a canary network for Polkadot. It's an earlier release of the code that holds real economic value. For developers, Kusama is a proving ground for runtime upgrades, on-chain governance, and parachains. So let's compare them. The circulating market cap, at the time of writing this, $7.5 billion compared to about $500 million. They're both down a little bit now in comparison. Total revenue, $115,000 for Polkadot and only $11,000 for Kusama. Circulating supply, $1.2 billion compared with $13 million on Kusama and Polkadot respectively there. Comparing the active accounts though, it's a little bit closer percentage-wise. 140,000 active accounts compared to 25,000 active accounts. But I found the most interesting in this data is the XCM messages, 65,000 compared to 58,000 on Kusama. That's very close. Total validators, 297 on Polkadot, 1,000 on Kusama. Total stake, 700 million DOT tokens compared with 9 million Kusama tokens. Looking at the total parachains, we've got 28 compared to 53 on Kusama. Polkadot's market cap, roughly 17x. Revenue, 11x. Concurrently, network activity much closer between the sister networks. Polkadot 6x and 3x of the transfers. And, statistically, right, nearly equal with these XCM messages. From a staking and decentralized point of view, Kusama actually has a greater percentage of total supply staked at 68%. Polkadot uses what's called a tri-cameral governance structure composed of community members, the council, and the technical committee. The construction has helped Polkadot grow through its infancy. However, Polkadot governance suffers from two substantial issues: slow voting, only one community vote every 28 days, and the centralization of the council and the technical committee. To address these issues, they're again moving to that governance V2 model. It eliminates community input barriers by allowing an unlimited number of proposals at any time. The proposals are bucketed into tiers to streamline the process. Each tier is based on various conditions, including a designated voting period, the quantity of votes eligible at once, as well as a down payment in DOT. Naturally, more stringent tiers will have higher thresholds. This new V2 governance also replaces the council and technical committee with a new body, the Fellowship of the Ring, the Fellowship. To mitigate, that's just kind of funny. To mitigate these centralization concerns, all users will be eligible to join the Fellowship of the Ring, of the DOT. Although the Fellowship will have a ranking system which leads to further centralization pitfalls, Polkadot will use multiple mechanisms to ensure sufficient decentralization. Hopefully, right? The strategy includes a constitution, a community voting for senior positions, and a design that limits leadership's control. As usual, governance will launch on Kusama before launching on Polkadot. Kusama is to Polkadot as Litecoin is, or really I should say was, to Bitcoin. Polkadot's primary focus has been and will continue to be improving the network's capabilities and functionality. The launch of XCM last quarter was a major milestone as parachains finally began communicating. Can you hear me now?
Can you hear me now? Can you hear me now?
We can?
Common good chains are really self-described. They're common good for the whole Polkadot ecosystem. The first common good chain statement supports the creation and management of fungible and non-fungible assets. Hello, NFTs. Parity also announced two new common good chains that are nearly ready for launch. The first will be the Collective, and it will allow groups to trustlessly work together. The initial users of the Collective will be the Fellowship and the Alliance. For the Horde! Right. Back to the video though, right? The second common good chain, Bridge Hub. Connect Polkadot with other blockchains. Asynchronous backend. Polkadot is planning its first major optimizations to parachain consensus since launch. Decrease parachain block time to 6 seconds. Increase the amount of block space by a factor of 5. Just a 10, and allow parachain blocks to be reused if they do not make it onto the relay chain. Parity Technologies estimates asynchronous backing will increase the network's transactions per second to between 100,000 to 1 million. That's a lot. It is scheduled for release on Kusama by end of year. And to close it out, a lot of crazy things have happened this year. To remind ourselves, crypto moves so quickly, but most of this stuff wasn't all that long ago. The Terra Luna collapse, Three Arrows Capital, right? Escalating Russia-Ukraine conflict, aggressive Federal Reserve interest rate hikes, wrecking the market, a mundane quarter with just a lot of bad global macroeconomic things going on. So, Polkadot's financial network activity largely reflects the native chain or the relay chain activity. Closely correlated KPIs like active accounts, new accounts revenue, token transfers all experienced double-digit percentage declines. Again, declines likely driven by the expected deadlines and parachain slot auction participation, but really, in my opinion, more so just bear market woes. Like, there's not a lot of people that are getting into cryptocurrency right now. They're watching or they're leaving. It's scary. I get it. People are born with paper hands. You have to develop the diamond hands. And really just have to be truly interested in cryptocurrency to enjoy it, use it, especially to this deep of a level, and stick around. At the end of the day, most people exposure to crypto tokens will be buying a coin on a centralized exchange. That's sad. They missed the best parts of it. But go ahead, tell me how you're a SHIB general. As we discussed, most activity taking place on these parachains, decentralized nature and staking remaining consistent here. They have some good things in the pipeline coming up. And that's just, really the entirety of it. We've run through it all. I don't know if we really need to recap it. I've really tried to break everything down. And I will say, as a full disclosure and disclaimer here, and make sure you're aware, is this report was commissioned by Polkadot. And, this is a common thing for Messari. They do good research to the point where they get commissioned to, hey, research my stuff. Personally, I don't see really any bias, any shilling here. I've read through this obviously before recording, and what I see is just good data. And with good data, you can make your good decisions. Really that simple. So, video is pretty long. I think I said enough today. I hope you enjoyed it. If you did, please subscribe to the Voskcoin YouTube channel, which of course is home to our CRO, our Chief Research Officer, the fluffiest butt in the game. That's gonna be Tickly Tails. My name is Vosk. Again, Voskcoin YouTube channel. If I say it again, will you subscribe? It's like the Teenage Mutant Ninja Turtle intro song. They just kept saying Teenage Mutant Ninja Turtles, and then you remember. Is that marketing? I'm not trying to become an ad. Oh my God, I'm becoming an ad. I gotta go.